Let's learn the Strat. Welcome everybody. This is going to be my Strat for beginners video. So this is basically for anyone who wants to start from scratch learning the Strat. Okay, let's get started. So just what is the Strat about? It is a price action trading system developed by Rob Smith. The Strat uses candlesticks to determine price action and focuses on what we know to be true on multiple time frames. And there are only 3 scenarios for a candle. The 3 candles is what we're going to focus on next. So you want a balanced mix, which is the 3 truths. Okay. You want to make sure, do you have time frame continuity? Is there an actionable signal? And are your broadening formations drawn? Edit. Girl, come get over here. Go sit down. Back. So what is an actionable signal? An actionable signal is what we use to take action on our Strat combos, which we'll get into the Strat combos shortly. First is a hammer. Now, what is a hammer? A hammer is just like it sounds. It has a long wick and a small upper body. This is actually a big upper body, but it lets you know that bears tried to sell it off and bulls stepped in and ended strong. It's even better when there's no wick at the top. Shooters are the complete opposite. Basically, buyers tried to buy it, but bears pushed it all the way down. This is an even better example here of a shooter than this is of a hammer. Even better hammer looks like that, like this one in reverse. But basically, you see it opened here. They pushed it all the way up, and bears pushed it all the way back down, and it closed close to where it opened at. So for the hammers and the shooters, your actionable signal is a break to either side. So the actionable signal is a break above the high of this candle. So we would call that a hammer in force. A break below the low of this candle would be a shooter in force. Next, we have my third favorite. Because there's only 3. All of them are my favorites. But the third is the inside bar. And an inside bar we will talk about shortly, but basically the inside bar is indecision. This in particular is a doji candle, meaning just like how in this shooter, it opened and closed close together, but also in long wicks on either side. That's an indecision candle. Basically, what we look for as an actionable signal here is a break to either side. So you're looking for it to break above the high of this candle or below the low of that candle. That's your actionable signal. That's what you take action on. So what about these numbers? What are these numbers? So we just talked about inside bars, right? Those are your 1 bar. They stay within the previous candle. Your number 2 bars are directional bars. That means that a side has chosen. So usually if you have a 1 and it breaks to the upside, it's a 2 up. To the downside, it's a 2 down. 3 bars are outside bars, meaning that both sides of the candle were taken out. And we'll talk about that a little bit more. So the first thing we are going to learn is, what are the numbers? What in the world are the numbers? You see these numbers and you're saying, what in the world is going on? Okay. So we are not going to pay attention to the color of the candles. I want you to understand what the candle is doing. Okay. So starting here from the left, we're going to start with the number 1. The number 1 is an inside bar. An inside bar is just that. This bar from open, high, low to close stayed within the previous bar. The Strat numbers are based on what it does, and this stayed within. If it had not stayed, it would have turned into a 2. Okay? So going back to the 1 bars, let's look at the ones that we have on this chart. You have another one here. This one stayed within this previous bar. You have another one here. This stayed within the previous bar. And then you have another one here. This stayed within the previous bar. Inside bars are great because they are usually resting bars, or they give us a sort of, you can just kind of figure out which direction it's going to go after that to see whether it's a reversal or continuation, that type of thing. It kind of depends on where the inside bar is at for you to decide how you want to make your move. For instance, with Apple, we were on an uptrend here. Uptrend here. This inside was a rest. And then we were on an uptrend. Then this inside bar was a rest before we started turning down. Okay? So that's the 1. The number 2 bar is a directional bar. So as a 1 bar is an inside bar, it's a resting bar. A 2 is a directional bar. A 2 means that one side, either the high or the low, was taken out. So a 2 up means that the high was taken out and it 2 upped. A 2 down means that the low was taken out, so it 2 down. Okay? So let's look at some of these 2s. When it 2 up, it took out one side of the candle. One side, 2 up. Then here, it took out one side of the candle, 2 down. One side, 2 down. 2 up. This right here was a green 2 down. And again, I was telling you not to pay attention to the color of the candle, but we took out one side, just barely, and it reversed. It was still a 2 down though. And then we did a 2 down, which here you had a rest, 2 down, came back in, and then it reversed. 2 up. 2 up, but then it came back in. 2 down. So those are directional bars. Those are bars that let us know what direction we are going. Who is in control? What is the next 2 is what we always look for. So if we are here on this 1, what is the next 2? 2 down, 2 up. That's what we look for. Last but not least is my favorite, the 3 bar. So remember with the 1s, it stayed within the previous bar. With the 2, it chooses a direction, either down or up. With a 3, it takes out both sides. Okay, so knowing how open, high, low, close is how we can see what this did before. We opened here, which it opened already taking out that previous high. So it opened as a 2 up, right? That's how it opened, because it opened up here. So it was already a 2 up. It came up, came back in. And the rule for a 3, oh, sorry, I'm going to take that out. That's the 50% rule, which we'll get to in another video. But what happens is it took out the previous high, came back in, came all the way down, and also took out the previous low. So this is an engulfing candle that will engulf both the open, high, low, and close of the previous bar. It's a big candle there. All right, so let's look at another one. Same thing here. We opened, we took out the previous high, came back in, took out the previous low. That's how you make an entire 3 bar. Here we opened, took out the previous high, came back in, took out the previous low. So here's a little bit different. Here, you closed here, opened here, dropped all the way down, took out this previous low, came back up, took out that previous high before it closed. So that is what a 3-bar looks like. So we will do part 2 of the series where we talk about how to put the combos together, and beyond the numbers, what are the combos that you look for. Okay, now that we have the numbers and we understand the numbers, now what we want to do, and we understand, first of all, we understand the numbers and we understand actionable signals. What are actionable signals, right? Now we put them together in our combos, okay? We always want to know where's the next two. The next two, all right? So going into this Strat cheat sheet here. This was created by Sara Strat Sniper. She will forever be my Strat mentor because that's where I learned from. And I still encourage you to watch all of her videos because I did several times. She created this cheat sheet a while ago. She actually has an updated one on her Twitter. I think it's on her pinned tweet in Google Docs. But I like this one because this is the one that I learned. And I think I like this better for teaching purposes, or for me to teach anyway. So there are a few things that we're going to focus on here. So when we trade the Strat, we love to trade reversals, right? So I want to show you the difference between a reversal and a continuation. Why do we need to know the differences? Because we want to enter on reversals and add on continuations. Okay? So let us first look at continuations, and then we'll get to all the reversals. So a continuation, where you add to your position, basically you have a 2 down, a 1 resting bar, and then your entry to add to it would be a break of the inside bar to the downside as a continuation in the move in the direction that you're already in. Same thing from the bullish direction. You have your resting bar, you want entry at the break of that inside bar to the upside. 2 bullish continuations and bearish continuations I don't normally ever play, but if you're in there and say, it closed here, then it opened here and it continued going down, you can definitely add to your position at the break of this 2 down for a continuation to the downside. So that's a continuation. This is where you would add to your position. Now where you would want to enter is on the reversals. Okay, so you see what a continuation looks like. But imagine if this was going down, it rested and then reversed like this. So it was going down, rested, and it reversed. So your entry is the break of that inside bar, because remember, the inside bars we're looking for a break in either direction. The break to the upside, and your target is the top of the previous candle. Okay, so the same thing in reverse. You have your green 2 up inside candle. You're looking for a break below the low of that inside candle, and your target is the low of the previous bar. Okay, so we are doing previous lows and highs for your entries and your exits, but just understand how it works. If you just have a simple 2-2 reversal, you have a green 2 up, and then bear stepped in, and you have a red 2 down. Your entry is the break of the 2 up, the low of that candle, and your target is the low of the previous candle. For the bullish side, your break is a break above the high of the red 2 up, and your target is the high of the previous candle. So it kind of works in the 2-2 reversal and the 3-2-2 reversal are similar, just in the sense of you had a 3, which is a mother bar, very strong bullish action, And then the 2, which what happened here is it took out these highs and then reversed. So what you're looking for is for it to continue that reversal and target the lows of that same candle. So your entry would be the break here, the low of this candle, and then your target is the low of the previous candle. And the same thing in reverse. 3, 2 down, took them out and reversed. Target the high of that previous candle. So me and my inside bars. The 312 is one of my favorites, just mostly because of the magnitude of a 3 bar, which is usually big, if it's strong enough. So you have your 312. Your entry is the break of the 1, the low of this candle. Your target is the low of the previous candle. And then you have the 312 bullish reversal, break above the high of the 1 candle, and your target is the high of the previous candle. Okay, so now I want to talk a little bit about corrective activity reversals in a trend. So these two in particular, the bearish Strat reversal and the bearish Randy Jackson, are TTOs, or corrective activity, that usually indicate a continuation of a trend. So you have the 1, 2 up, 2 down, bearish Strat reversal. You have your inside bar here. The 2 up is your corrective activity. We have taken out these stops. We have taken out the previous stops. Your entry is the break below the 2 up, that low of that candle, and your target is a little bit different. It's not the 1. Usually everything else is the previous candle, right? For the Rev Strat, your target is the candle before that 1. So the target is the low of that candle before the 1. That is the only one that's different. Okay, Rev Strat reversal is the only one that's different, where you would target 2 candles behind. You don't target that the 1 low or high. Your target will be that previous candle. So in the bullish, you got your 1, your 2 down corrective activity, and your reversal, and your entry is the break above the 2, and then your target is not the 1 but the high of the candle before it. Okay, so that is a Rev Strat corrective activity that gives you a little bit more range. I actually really came to like this. I wasn't paying attention to it as much, but yeah, when it plays out, it's actually a nice range that it can go, instead of just targeting the previous candle. So another one I want to point out as far as corrective activity is the Randy Jackson. Usually this occurs during some type of trend. So for example, you have a bearish downtrend. You have a corrective move here, where basically it took out these people here, and then it reversed, and your entry is the low of that candle, and your target is the low of the previous candle. Same in the bullish move. You got your 2 ups. You have your corrective 2 down, TTO'd. We'll talk about that in a minute. And your entry is the top of that candle. Target is the top of the previous candle. Okay, and so then the 1 bar bullish Rev Strat and bearish Rev Strat reversals are simply when this has broken below here and it comes back in. Your entry is here. I hardly ever play those, but we're going to talk about outside bars in another video. You actually can watch my segment on the weekend shift to learn more about those. Okay, so let's also bring your attention to the pivot machine gun. So the pivot machine gun here, I want you to notice the way this works is you're looking for 5. It has to be 5 consecutive lower highs or lower lows. This is lower highs. Just imagine it in reverse for lower lows. And what you're looking for is if this has enough strength, it can take out all these stops at once. And this is whatever time frame you're on. It be the 15-minute, the 1 hour, the daily, the week. But keep in mind, it may take that long to do that. But the purpose of a pivot machine gun is it will go fast. That's why it's called a machine gun. So the way it took stairs to go up, it was the stairs up, elevator down. All right, so you're looking for 5 consecutive higher highs or lower lows to see if they can be taken out. Okay, so now let's talk about the TTO. Triangle day out is corrective activity. So y'all have heard me talk about, like when we were talking here on this corrective activity, it's basically a broadening formation on a higher time frame. But what it is if people shorted here, they put their stops here, right? So naturally, when price came up here, they got stopped out. He coined that term, triangle day out. Ding, they're out. On this one, ding, they're out. Ding, they're out. Time to reverse because we have no new sellers. Okay, so that's what triangle day out is. It's basically corrective activity. You can see here, if you shorted this here and it came down and then you bought it here, when it came back up, they got taken out. Right? Once they got taken out, they may have reshorted, came back in here. These people that bought here got taken out here. They may have rebought, and then the price goes back up to continue that broadening formation. And we'll talk a little bit more about broadening formations a little bit later. But basically, that's what the triangle day out is. It's taking out highs and taking out lows. And this is how broadening formations are created with TTOs. So now you know what they are when you see people say TTO, things like that. So, and then we're going to talk about multiple time frame analysis and time frame continuity, and understanding that the highest probability trades occur when there is full time frame continuity. That means the time frames that you're looking for are all in alignment. You want them all to be green or all to be red. That's the highest probability trade. Otherwise, if it's in conflict, it can be choppy and it's not giving you exactly what you need. Okay, so when you're looking, you want to look on the month, the week, the day, the hour, and have them all line up for high probability trades. The quarter and the year as well, especially if you're trading longer term. But that is what full time frame continuity means. And the multi-time frame analysis, we'll get into that in a little bit. But yes, again, if you are trading, it depends on what type of trader you are, and that's something that you should always figure out. Okay, so we talked about that. Let's skip that, the time frame continuity and the multi-time frame analysis. Let's talk about that just a little bit more. Okay, so we are not going to have tunnel vision when it comes to time frame continuity. Okay, we are going to keep time in our heads at all times. Why? Because this gives us high conviction, super high conviction, and we understand who is in control and where the money is flowing when we know it's in full time frame continuity. For this chart, the buyers are buying. Okay, and then also for understanding the domino effect. So you know, you've heard of OCO orders, and one trigger the other orders, right? Well, that's not just for for options trading. That is for the strat as well. So say for this chart, you know, we have full time frame continuity, but here we are seeing that we are having mixed time frame continuity here, but then we have our reversal. Okay, so we have a 3, 2 down. And what's our actionable signal? The hammer. So 3, 2 down, 2 up, back into full time frame continuity. So you know that the quarter, the month, the week, the day are all green, but the 4 hour and the hour are red at that moment. But you have triangled them out, and you have your actionable signal here. So you would trade this back into full time frame continuity. That is a high conviction trade That's the domino effect, and that's high probability. So looking a little bit more at time frame continuity. So how can you draw this out and understand this yourself? So I would start on the quarter. Now, if you are trading, I do want to put a disclaimer. If you're trading larger time frames, start on the year. But I'm going to, for this purposes of this video, I'm going to start on the quarter because that's the minimum at least that you should start at. So what you need to do is when the quarter opens, you are going to draw a line at where the quarter opened, and you're going to label it the quarter open. So you know that as long as it stays above where it opened at, the quarter will stay green. Okay? And so then once our month opens, because at first when you start a new quarter, your month, your week, your day, that's all going to be the same, and it has to uncouple, and we'll talk about uncoupling later. But basically, when you get to your month, you're going to draw your month. Excuse me. When you have a new month, you will draw a new month, or you can just move that month open because you don't need to draw previous months. You just want to keep track of where the quarter is and where the current month is opened at. So if you look at it, we see where the quarter open is at and where we are on the month. So we're pretty far away from the quarter open. Now, I did this on December 1st, 2022, right before SPY did its thing where it is now. But you can basically see where I marked where it opened for the month and where it is in relation to the quarter. So that lets you know when a new month opens, because when this month opened, we knew, okay, yeah, this month is open. We're pretty far away from the quarter, but if we come down here and we break below here, the month is going to be red, and then we're going to flip the quarter red. Didn't do that though, kept going. Still far away from the quarter open, okay? And then once it came down and came back up, it flipped the month back green. So this is where it's at now. So then you want to go down to your week. And you will only have to draw the month once a month when it opens, but you will have to change the weekly one every week, of course. So then after you have that, you will see where it is in relation to a smaller time frame. Okay, the quarter is down here. The month opened here, but we're below the month, which is why over here the month is red, right? But on the week, we're above where we're opened at on the week, meaning that we are still green. If we were to break below the 399 here, then we would have flipped the week red. So I hope that is making sense on how it flips and how you can draw it out to see how to take the highest probability trades. So I want to draw your attention really quickly down here to this day chart, only because you can't see the quarter at the bottom. Because obviously it's way down there at 363 and the current price is at 408. But you can see where it is in the month and the week. So where this is currently on the day, if I were to trade this and use this for time frame continuity, it's kind of not in here. But you see on the day, week, month, it's kind of in conflict. So this wouldn't give you the highest probability. But just for teaching purposes, I want you to understand something. So if we did a 2 up, 2 down, we're already red on the month because we're below where we opened at on the month. But, we have a new week. If this breaks down on the day and breaks below 404 or whatever the low of this candle is, and it comes all the way down to the bottom of this candle, it will flip the week red at 399.09. So we know that is a high probability trade because we have a 2 down. This isn't really an actionable signal because it's not a shooter or an inside bar or a hammer, but the Strat signal is a 2 up, 2 down. So we could trade it down and see if it flips the time frame continuity on the week red. Okay, hopefully that makes sense. And so now let's talk a little bit about broadening formations a little bit more. So broadening formations are higher highs and lower lows. And so if you understand what we were talking about TTOs, right, and how they make broadening formations like that, then you'll understand how you draw them. So you're going to connect your higher highs and your lower lows within a range. And understanding that this is a little subjective. There are different people that tell you how to draw them. You can draw however many ranges you want. You can draw them from each three if you want. You can draw the downtrend broadening formations. Find what works for you. But essentially, within a range, you want to connect a higher high and a lower low, and you don't want to trade without it. Now notice I connected these highs, but I did not connect these. The reason being is this high has not been taken out for me to connect one over here. So it would be connected back here, and it would probably be like up there. So I am just trading this monthly range at the moment. If it breaks above, then I would draw a new broadening formation. But keep in mind the top of this broadening formation coincides with these stops here. Okay, so if it makes it to the top of there, it would take out these stops. And then of course I would look for, because it has taken out these stops and these, I would look for it to make a new low to come and take out these stops. So you're looking for it to come up and then possibly come down. Remember, broaden is the name of the game here, y'all. So let's take a look at some more examples of that. And if we look here on the month, this is drawn on the month from this range right here of where it is. And we're looking to see if it will take out these stops here, which would coincide to the resistance here. So then if you draw that on the week, this is the same chart from the month to the week. And you can see it because I color coded them. The month is purple and the week is yellow. So my purple one is already here on the month, but I wanted to draw a shorter weekly broadening formation that was created here. Once they took them out, I drew that broadening formation. Why? Because we want to see if, because it took them out, does it have strength to continue, or is it going to come back down? So that's your weekly one. And then there's your daily. Now the daily, I didn't draw all of them because I didn't want to like overclutter the screen. But again, you can draw more within the ranges. You know, I'm sure hopefully at some point you'll start being able to see that there are some, you know, and then you'll be able to trade within that range. But you can see how it breaks down the month, the week, how you don't need a lot to see that it's still moving within that range. For shorter term traders, you may want to draw more shorter term broadening formations. For instance, this is the 4 hour, and there are multiple within there. You can break it down to the 1 hour if you want, and especially for day traders, that is perfect. But yeah, hopefully that shows you how you can draw them. I also did another video. See if I can link that. And then you can watch a little bit more about it. But it's going to take practice and back testing. So I just wanted to say, if anybody wants to contact me, or you want to follow me on TikTok, scan my QR code here. Subscribe and like this video, please. Share it with anybody who could use a lesson on the Strat. And I thank you so very much for watching, and I hope you all have a wonderful day.